Germany is facing a possible recession again. Industrial production plunged by the most since the global financial crisis. That comes a day after a report showed factory orders fell at the fastest pace in more than a decade. Well, Jeremy Stretch of CIBC, Peter Dixon of Commerzbank are still with us. Peter, when you look at German manufacturing, so the car sector is not doing great. We're talking about possible extra tariffs that the Trump administration would impose on German manufacturers, German car manufacturers. Is there any value? Brexit's happening, weakening, of course, Europe. Is there any value in owning, German stocks?
I think there's value, but right now, I admit that the headwinds to that value is looking quite significant. I mean, once we get the earnings season out of the way, the Q4 earnings season, once we've had a chance for analysts to see what the outlook is for the 2020 global economy and what companies expect, that's the time perhaps to step back in. But of course, it's all dependent upon what companies think is going to happen to what the coronavirus is going to do to their earnings. At the moment, I'm reasonably positive, but I certainly see there are reasons to stay cautious, stay out for until you have a bit more certainty.
Okay, what's euro right now? I mean, I know what it is, but is it kind of like, does it just, is it a parallel to what is doing to the German economy?
Well, clearly, the longer, as I mentioned, the longer there's headwinds to the German export sector persist, the greater the headwinds to the performance of the euro. So, in a sense, we have seen brief flirtations with trying to move to the upside and optimism starting to kick in, and we saw that late last year. But the data now is seemingly suggesting that that rebound that we've seen in some of the PMI indices is not perhaps quite as durable as we'd hoped, and so obviously that's taking a little bit of wind out of the sails of the euro. So for now, we're still caught in a sort of a 109, 112 range, and I guess it's still playing that range ultimately. And I think if we can see some degree of stabilisation in the externalities, then I think if we do see that low 109 print, then it probably gives you a short-term tactical opportunity to start to load up on euros again at slightly lower levels. But it is very much reliant on that sort of global backdrop. But I think it's interesting that investor sentiment in the eurozone is at a two-year high, and that's perhaps cognizant of what we're seeing in the Euro Stoxx 50. So there's a real disconnect between the real economy story in Germany and perhaps some of the metrics of investor sentiment.